Trust us, it's brighter.
What we've seen in cryptocurrencies as well, in your announcement that you'll allow account holders to use digital assets like Bitcoin, for example, to make payments. Just talk to me about the kind of volumes that you're seeing, because you're being credited or accused of fueling the rise that we've seen, particularly in Bitcoin. But other digital assets too, I have to say.
Yeah, I think if you think about the digitization of industries, as I mentioned, the same thing is happening in financial services. Anywhere between 40 to 70% of consumers want to use cash less. They want to move to forms of digital payment. So think about that. Paper money is slowly but surely going away. And what will replace that? Well, what will replace that are all forms of digital currencies. Those digital currencies could be any one of a number of cryptocurrencies, including Bitcoin, Ethereum, and others. And also, as we talk to regulators and central banks around the world, there's no question in my mind that it's just a matter of when and how, not if, that central banks will start to issue forms of digital currencies as well. And so our move into the space of accepting digital currencies is basically understanding those trends and trying to position ourselves to help shape that future where both central banks will be more digital currency players, as well as forms of cryptocurrencies will move from being just asset classes that you can invest in, but actually can increase their utility by utilizing that cryptocurrency as a funding instrument to do everyday commerce. And I think once we bolster that utility, you'll start to see more stabilization of these different cryptocurrencies and a slow increase in value over time. Of course, today there's still investments and they can go up or down, but our move into the crypto space, working hand in hand with regulators, was to bolster the utility of all cryptocurrencies and digital currencies.
I've read that you own Bitcoin yourself. Do you still own Bitcoin? And to your point, which I think is a great one, this balance between the utility value, the transactional value versus the store of value, you holding it as investment. Dan, why do you hold digital assets and Bitcoin, if you still do?
Well, I'm a believer that the world is moving towards digital and that forms of cryptocurrency, like, for instance, Ethereum, that are built on more modern technology that can move money faster and maybe less expensively, can put on top of the movement of that money things like smart contracts, can add utility to a payment. And I think it's when we start to move and cryptocurrencies, digital currencies issued by central banks, all under a regulatory framework, have more utilization than just being an asset class. That's when I really think you're going to start to see that move more into the mainstream. And as I look out into the near future, 1, 2, maybe 3 years out, that's a trend that we will definitely see.
Well, this thing has a tendency to crash up if you really study Bitcoin. After I got fired from the White House or returned to my job, that's one of the great things when you own your own company. When you're fired, you can go back to work. I spent 2.5 years, 3 years studying Bitcoin, analyzing other digital currencies. Right now, this thing is crashing upwards, so it is due for a correction. And these corrections can be violent. They can be 20 to 50%. So you have to be very cautious. But I will say this, if you took $1 and you put 99 cents of it in cash and 1 penny in Bitcoin over the last 10 years, that asset allocation strategy outperformed the S&P 500. And so Bitcoin's best days are ahead of it, but it's going to be volatile, and I think people have to be prepared for that.
It really has been an absolutely remarkable couple of years for MoneyGram, and certainly what we've seen throughout 2020 has been nothing short of remarkable. As you said, the performance of our digital business has been just absolutely amazing. And even prior to the onset of the pandemic, we were seeing phenomenal returns on that business, with increasing customers utilizing our app, increasing downloads, increasing throughput, and expansion, of course, into a number of markets with our online services. But ever since the pandemic has kicked in, we've really seen just complete resilience in that business and a continued acceleration. As you said, 11 consecutive months of triple-digit cross-border growth, 136% in the month of November. And it's really been driven by that utilization and convenience of mobile technology, the simplicity of the throughput, and the ease of which consumers are finding digital applications, particularly during the pandemic when, stay-at-home orders or shelter-in-place orders have really restricted their movement and their ability to get out and do what they might normally have done.
What proportion of the customers are now using digital platforms versus before? I mean, just give us a sense. Yeah,
absolutely. In the U.S., we've actually roughly doubled the output through our online platform as compared to our walk-in business. So U.S. outbound is really driving tremendous over the past year. About 27% of our global business today is digital, but that's, of course, against the backdrop of really, 200 countries that we operate in, and only about 80 of those really digitized today. So when you look at it kind of on a more isolated basis, that percentage is even higher. And as I mentioned, the U.S. is a great example of that, where we're really seeing this surge in consumers looking for that online application and the ease of use and the convenience of it. We're also seeing an increase in face value sent on a per transaction basis, and that's even throughout the pandemic. And so you're definitely seeing the resiliency of the consumer base, and then the ease and convenience of the online application. And we've seen about 140% increase in new customers on the online platform. We've seen a 220% increase in transactions through our app. So across the board, simply remarkable returns, and we're very, very happy with that performance.
Yeah, and it's not just about remittances, though. I do want you to tell me what you've seen in terms of remittances, because when you see a struggle in the economy and people losing jobs in one country, you'd assume they send less money home, but I know it's the opposite. Just explain what you've seen in terms of people perhaps sending more money back to foreign nations rather than less, despite the economic strife.
Yeah, it's a great point, and it's one that's certainly counterintuitive to what many people expected, particularly early on in the pandemic. There was expectations that we would see remittances drop globally, and certainly we saw that, right at the start of the pandemic when the real shelter-in-place restrictions kicked in. Since really the back end of April and into May, we've seen just a resurgence in remittances. We did a survey recently of 1,500 of our customers here in the U.S., with 80% of them saying that they feel that their friends and family back home are more in need now than they've ever been before. 70% of our customers saying that they have sent more home in 2020 than they have before. And I think that's really reflective of the responsibility that a lot of our customers and migrants take on when they leave their home country in the first place, the reliance on the support that they send back. And so you see many consumers finding more work, moving around, and obviously unemployment is up in a number of areas, clearly hospitality, service, restaurants, etc., the cruise industry. But when you look at, the resilience of food processing, agriculture, the stability in some cases of construction and other type industries, our customers figure it out. They also tend to have a higher propensity for saving as well, as compared to perhaps a normal or regular U.S. citizen, and so they're able to tap into some of those savings as well and really hold back on their own expenses to send money back. We are seeing an increase in face value sent per transaction and an increase in transaction growth across the board. So it really is a very different outcome than I think many people expected. And of course, there is concern about sustainability of that. Obviously, stimulus has helped cases and these types of things. But clearly, as the pandemic has moved along, we really haven't seen a slowdown at all in their sending habits, and so that's been very nice to see.
And wow, it looks like an enormous debut. Co-founder and CEO Brian Chesky joins me now. Brian, wow, stunning. We talked in June, and you were in a dire situation, the company was. How do you explain going from that to what looks like it could be $100 billion debut today? I could have never imagined in January where we would be in June with very difficult circumstances, and then now to get to here. I think there's kind of two explanations. The first one is, people still do yearn to travel, and after months of being stuck inside, people did want to go in cars, and they wanted to travel nearby, and they wanted to stay places longer, and so they chose homes, and they chose homes in Airbnb. And so it really just shows our model is really adaptable. But I'm also reminded of something that my dad used to tell me growing up, and I had to tell myself this a lot during the depths of our dark days. Mm-hmm. He said things are never quite as good as they seem and as bad as they seem, and you kind of have to remind yourself of that to kind of find the midpoint between these highs and lows. There you go. Keeps you humble even through a debut like it looks like it's going to be today. There was a lot of pain for you guys, including the 1,900 people you had to lay off over the summer. That's 25% of your workforce. So today's got to be a bit bittersweet because they can't share totally in all of this. I know many of them got to keep their shares, but I just wonder, I keep thinking if this IPO goes as well as it looks like it's going to, can you hire some of them, all of them back? Yes, absolutely. I mean, quite a lot of them have other jobs now, and I presume that many of those people are happy in those jobs. But when we had to do the layoff, which was absolutely the most difficult decision I or any CEO really has to ever make, we published a directory. We allowed employees to opt in saying, we'll publish your information online if you'd like, and then we can point recruiters to you. And we did that. Over 1,000 employees opted in, and more than 500,000 people visited their profile. So quite a few people got hired, not all of them, but we would absolutely welcome people back. And so, yeah, and I want to see how the storm continues to play out, but absolutely. Yeah, that's a big deal for any of them who are listening. Is the travel industry forever changed? Like, does business travel ever go back to what it was? Do people ever go back to the way they used to travel and where they used to stay? Well, I don't think the world ever goes back to January. And if that's true, I don't think travel goes back to January. Now, it doesn't mean travel's over. It doesn't mean business travel's over. But I do think there's going to be a major mix shift from business travel to leisure travel, because obviously a world of Zoom is a world of flexibility. It's a world where you don't necessarily need to get on a plane for a single meeting. And so I think a number of people are going to decide I'm more flexible, and maybe they'll actually live more remotely. Work from home could be theoretically work from any home. So I think you're going to see a general mix shift away from concentrating into tourist districts and a lot of business travel. But business travel is still going to be around. So long as people are in business, they're going to meet. And the travel industry is going to be just fine, but it's going to have to be different because the world's going to be different. Sure, it is. And here's one big question I had for you guys when I thought about this today. Your announcement, this comes on the same day that the FDA may grant authorization for the first COVID vaccine in this country. That would be huge. Are you thinking about mandating vaccination for anyone that wants to stay in or rent out on Airbnb, proof of vaccination? It seems like it would keep people a lot safer and healthier. Well, these are great questions. And, we actually hired the former Surgeon General of the United States, Dr. Vivek Murthy. He's actually now the co-chair of the COVID task force for President-elect Biden. And so Dr. Murthy worked with us on a lot of health and safety guidelines. One of the first things we implemented was a enhanced cleaning protocol, which is basically new standard cleanliness guidelines for hosts. More than 1 million hosts have opted into it. And so we've tried to just use the guidelines through Dr. Vivek Murthy. We have other experts, and we will continue to evolve these guidelines as we learn more. Maybe a mandate for vaccine, something you're thinking about? Well, I don't want to speculate on things that would involve people's health, but I will say that we're working with the experts, and we want to be a standard for health and cleanliness.
Let's talk about the stalling recovery and whether you think there's going to be a double dip recession because of the trend we're seeing with the jobs numbers.
You know, what we're seeing is slowing momentum, that's for sure. We peaked in terms of job recovery in June, 4.7 million jobs added. This latest November print was right around 254,000. We're still 10 million jobs in the hole since February. So even at a pretty moderate clip of 254, it's going to take years to see a pre-pandemic level of employment. So that's where we are. Now, nothing is written in stone yet about how the recovery progresses from here. And stimulus could help us actually make up some momentum, keep things going, and prevent a double-dip recession. What is more likely right now is a K-shaped recession because the effects of the pandemic has been so uneven across companies, across businesses, and across workers. Very different effects depending on where you are in the economy.
Just looking in the short term right now, because we just learned the economy created 245,000 jobs in November. Trying to get your prediction here. What do you think December is going to look like? Do you predict a negative number?
You know, it's going to, I think, continue to show this cooling trend. It could go down below what we saw in November because, remember, the pandemic is still in the driver's seat. It's still controlling the way workers and the consumers engage with the economy. And until the pandemic is no longer a factor, we're still at risk for a deceleration when it comes to a jobs recovery. Again, a lot of these benefits that have helped the economy from Congress expire in December. So we really want to keep an eye out, not only for the pace and the economic momentum, but for bipartisan legislation that can serve as a bridge until we get a widespread and widely distributed vaccine that helps consumers re-engage and helps the economy continue on its own in a sustainable way.